reading from the article that is coming. That's what at least one financial expert is saying. Charles Brown of CB3 Financial says,
one of the brilliant moves that Kmart has done is to partnership with Facebook in these e-gift certificates, so you can actually...
Of government mismanagement. Charles Brown is the president of CB3 Financial Group. He joins us this morning from Chicago.
Significantly dropping. Basically, this is the year of the consumer.
Believe that they're capable of managing anything?
Well, it's sort of like handing the keys to the chicken coop to two wolves.
Good evening, everyone, from Chicago. It's Thursday, September 3rd, and I'm your host, Charles Brown, Portfolio Manager with CB3 Financial. We're glad you're with us tonight, and I have a special shout out to my new friend, Chris Lopez, from the Free State Project in New Hampshire. As you guys know, I've been to New Hampshire a week or so ago. I'm real interested in their Live Free or Die motto. We invest with free thinking here. We believe in liberty and we want the very best for our clients. From COVID to clarity, this is CB3 Live. Let's get right into it tonight. The top three, of course, Corona America, comorbidities. That's the word of the day. Comorbidities and the rural high-speed divide. Stocks take a pause from their new highs, and the 2020 political campaign is getting underway. As you guys know, that have been watching, we ask that you subscribe so you can get my updates, our Monday night MASH, and then our Thursday night program, so you know when we're going live. And if I may do a special broadcast from now every once in a while, just to keep up with what's going on in the political current. Also, would suggest that you follow me on Twitter. I tweet every day, sometimes twice a day. So do that, and you'll keep up with us, okay? You'll also find us on Facebook and LinkedIn. So COVID-19, this just came off the press about 3 hours ago. Haven't fully read it, but what I'm seeing is Johnson & Johnson had a testing kit that I talked about last week, and now they have a pre-clinical trial that has proven useful in Syrian golden hamsters, okay? But what they've done is managed to keep these hamsters from contracting COVID-19 even when they were subjected to it. So just know that what I showed you last week continues to develop, even though I won't cover it that much this week. The ongoing clinical trials and vaccine progress are really exciting. And that leads us to a reduction in the number of deaths. Now, I keep highlighting this. 1,000 deaths is still too many. But overall, the daily number of deaths across America are dwindling. And actually, this just came out yesterday. This is a new source for me, the Center Square. So as the name implies, they're centrist. They're neither on the right nor the left. And what they reported is that from the CDC, has determined that only 400 deaths in the state of Illinois since February are purely attributable to COVID-19. In fact, all the rest of them had other comorbidities, meaning they may not have died from COVID-19, but they died with COVID-19. In other words, it wasn't the cause of death, but they had it at the time of death. That's an important distinction, because when these numbers are revised in the various states, I think you're going to see that the actual morbidity rate drops dramatically. So the Trump administration has asked the states to be ready for the vaccine by November. Now they're saying November 1st. Isn't that an interesting coincidence? So these CDC letters were sent to governors asking them to speed the approval of facilities so that they can start distributing on November 1st, just before the election. So the CDC, following the lead from the administration, has sent notices to all 50 states saying we need facilities to be able in late October, very early November, according to the New York Times, which is a pretty liberal publication, that's when the vaccines are going to be available. There is no indication that they're going to be mandatory. Now, what we're seeing across campuses, we've been following this story. Duke University avoided this outbreak. So after 2 weeks of classes, the campus reopening, no problems whatsoever. Not the same at Notre Dame. They opened, they shut back down, 8,500 undergraduates, 500 of them tested positive. They went back to online learning, but now that the cases have fallen substantially, Friday saw only 17 cases. They have reopened. You're going to see this in various places across the country. I don't think it's a random issue. I think you've got some students who are just refusing to social distance and wear masks, and that's what's causing this on some campuses. And you have to be really smart to get into Notre Dame, so you'd think they would have figured that out. All right, so what we're seeing, based on our video from last week where you saw the issues with Quincy on one side of Illinois and Chicago on the other, parents in this state, I can't speak for your state, but parents in our state of Illinois here want their kids going back to school. They're missing the social interaction, and they do believe that the precautions are in place and that they're going to be able to safely do that. So from the Census Bureau, I wanted to see how many businesses actually had returned. Well, 25% of all businesses, small businesses, I should say, have expected or are getting back to work right now. But another 47%, so roughly 2/3 of all businesses, if you take these two categories, are going to take more than 6 months to get back. And that, of course, is what is changing the trajectory of the American workforce and the American workplace. We're continuing to see weekly insurance claims dropping, meaning people filing for unemployment insurance. That's a great sign, a great sign. And we're also seeing that permanent layoffs remain in check. So the permanent layoffs is the green line and the temporary are the blue line. So you see the spike there, but the permanent layoffs, if you look real carefully on the right side of the graph, they're not rising. Now, obviously, they're more serious. You can look down at the bottom there, and more serious in the leisure, hospitality, information. My industry, the financial industry, really has not been affected that much, although there has been some. But we like this trend of seeing the permanent layoffs not spiking up where the temporary layoffs are. We've been talking about why people are working from home. So long before this COVID-19 came along, the average commute time in America has been rising for 40 years, since 1980, and it spiked this year. So what does that mean? That means people are not being productive. So if you look at commute time, the less than 20, the 20 to 39, the 40 to 59, that encompasses well over 65% of all commuters. That's wasted time, and it's increasing. Look at the 2018 census, the 2019 or the COVID-19 remote. So this is a trend where these cities are seeing marked changes in their employment behavior. And I highlighted the really big ones: New York, Washington, San Francisco. There we are in Chicago at number 7, Boston in New England. Okay, so this is where the greatest metro areas have been affected by the telecommuting worker. And it's simply because the just on-pressing hassle of commuting, that 40-year bump you saw 2 slides ago, combined with COVID-19, has put pressure on employers to say, you know what, you're going to be able to work from home until further notice. I update this chart every week. We continue to plateau on the recovery tracker, actually going down a little bit on the health side, which is the red bar, the demand side, which is the demand for going back to the way things were at the beginning of the year, also dropping a little bit. I don't see a concern here. It is the summer. It's kind of a slow time anyway. I want to see what happens as September and October gets going in the autumn months. Those are usually real healthy months for the economy. So here's my question for tonight, and I keep doing variations on this to get you guys involved. Will the entire U.S. recover from COVID? Slightly different from last week. Will the entire U.S. recover from COVID? Answer A is all states will recover back to where things were in 2019. B is most states. C is, well, just some states. And D, all U.S. life will be permanently changed, meaning we really won't have a new or a return to the way things were, and there will be a new normal. So let me know, what do you think? A, B, C, or D? I'm going to look through the list of questions here because we're on a 25-second lag. Welcome, Larry. Good to see you with us. All right, so what do we have here, guys? All states, letter A. Most states, letter B. Some states will resume back to 2019. C or D, all. Life has permanently changed. We've got a D from Nellie. I'm actually going to add these to the broadcast now. We've got an A from Charles. We got a B from Keith. Welcome, Keith. Got a B from Kay. Good to see you, Kay. Got a D from Rex. Yeah, I think it probably has permanently changed. Although, over time, guys, the new normal will be something we just accept, I think. So, okay, Larry Wall got a B, and Connie's got a B, and Larry's an A. Dr. J, welcome. All life is permanently changed. There's certainly a lot of people that think that, Doc. Appreciate you sharing that. Okay, guys, so every once in a while, I like to try to bring you what I'll call a unique chart. Okay, so look at the items on the left. So you see the demand for the bra, and it just goes down flat. That's probably the craziest item on the list. Well, that's probably a stretch, but you see the demand on coffee straight across. Thanks for the answer, Greg. I see that a D. Yeah, it's changed permanently. So I think the D's have it in that question. Shaving goes along until we finally just quit and drops off. Toilet paper bumps up because we weren't able to get it, but now I think we've gotten back to normal. Sweatpants on a continuous rise. The really interesting line, of course, is the mask, because we really haven't accepted this mask as something that we need to do. And that's why the squiggly line exists there. But the one I want to point out here is the internet. Notice it starts and then gradually slopes and continues higher, and that's an issue. And that's an issue I want to talk about tonight, because what we have is a situation in America where we have haves and have-nots. If you don't have a broadband internet connection, it's a real challenge for you, especially if you've been told you have to work from home and you don't have the technology to do it. This is a real concern, and I think that we all ought to be aware of this, crossing the broadband divide and how that is causing consternation now in America.
I've been trying to get internet at my house since I moved here. It's been years and years, and I have used all the resources I can.
And we've wasted billions of dollars, and we've wasted time.
The pandemic has really shown that broadband is just like electricity and just like water. You really need it these days to survive.
As the school year begins, COVID-19 has again highlighted a digital divide. Millions of Americans in rural areas nationwide are struggling to connect to the internet. So why is the country's broadband infrastructure still not reliably connecting rural communities? The recent bankruptcy of one of the largest rural internet providers, Frontier Communications, helps reveal why. It's unclear exactly how many people in America lack a high-speed internet connection. The official estimate from the Federal Communications Commission is 21 million people, but others estimate it to be double that. A recent study by Microsoft says if you include people who have a connection that's slow or unreliable, the figure is more like 157 million people, or roughly half of the U.S. population. Eva Melanson and her husband and 3 kids have tried all they can to get internet access in Sissonville, West Virginia. Though Frontier is one of the only providers in the area, it's not even an option for their house.
We had Wild Blue satellite. We had HughesNet satellite. Then we gave up on satellite because if it rained or snowed, it didn't work. We switched to the cell phone booster, and we've tried to get regular internet at the house, Suddenlink or Frontier. They won't come up to our house.
Most days, Eva drives 3 miles from her house to this mobile home that her sister-in-law Sarah rents that gets faster internet from Suddenlink, another West Virginia provider. Sarah's house gets Frontier, but it's too slow, and just up the hill, Eva's house gets neither Frontier nor Suddenlink. The state is a patchwork of complicated, unreliable options like these.
I've been coming since we all got sent home for COVID and the schools got shut down. It was like the end of March. So we've been coming here since then to kind of take advantage of what internet we can get here.
On top of her full-time job, Eva is helping teach her kids and neighbors' kids as they start the school year with online classes. While broadband internet has improved for many across the country, for people like Eva's family and neighbors, makeshift options like this mobile home have become the best solution. Many experts, including former FCC Chairman Tom Wheeler, say one problem is that the federal government doesn't treat broadband like a public utility. Instead, it's largely relied on the internet industry to regulate itself and provide service in select areas at a range of prices.
Dating back before the internet even existed, the FCC has had a program where it collects money from telephone users' bills and rededicates that money to make sure that rural areas are served. This is very similar to how the U.S. extended electricity to rural areas. The FCC has taken that money in the modern age and repurposed it to try to extend broadband to communities across the country. They've thrown a lot of money at this problem. There are a lot of parts of this country that still aren't getting help.
Frontier might not be a household name like AT&T or Comcast, but it's one of the largest internet providers in the country. And in rural areas in Minnesota or in West Virginia, like where Eva's family lives, they can be one of the only internet options. 5 years ago, Frontier was awarded over $1 billion from the Federal Communications Commission to expand their networks in rural areas. Earlier this year, the company told the FCC it was not meeting its target requirements in numerous states. Then, back in April at the start of the coronavirus pandemic, Frontier filed for bankruptcy.
What was interesting about that bankruptcy is they had to disclose a lot of information that we don't usually get.
Frontier's bankruptcy documents offer a window into why rural parts of the U.S., and particularly states like West Virginia, lag behind much of the developed world in providing reliable internet. SEC filings Frontier provided to bondholders show the company chronically underinvested in faster broadband infrastructure like fiber optics. Only 21% of Frontier's service area is served by fiber, after more than a decade of promised upgrades. In a statement, Frontier said, "The available speed depends on multiple variables, including, especially in rural areas, the distance that the customer's location is from our internet equipment." The documents also reveal why they weren't required to invest in upgrades. Across the country, more than 1.5 million homes have only one choice for internet access: Frontier. For another 11.3 million homes, there are only two options for high-speed internet service. The company describes this as a strong competitive position. Frontier says the company offers service in many of the most rural areas of the country, places that our competitors largely choose not to serve because these rural areas often have challenging terrain, are more sparsely populated, and are the most expensive to serve.
Whether you're Frontier or whether you're Verizon, why would you be putting money into West Virginia when every dollar you put into West Virginia is going to return a lot less than dollars that you put into Pittsburgh or put into, a major urban area?
Eva's sister-in-law, Sarah, works from home and started renting the mobile home for $600 a month after struggling for years with slow internet speeds from Frontier at her house.
This is the Frontier internet, and we're going to do a speed test.
It's the only option she has at home, and she still pays $130 for both phone and internet services, despite her efforts to find an alternative.
I've filed FCC complaints. I've contacted the governor's office. I've called people. I've signed petitions. I've done everything that there has been to do something about improving it. I've participated in because I depend on the internet.
The FCC's chairman, Ajit Pai, says his number one priority has been closing the digital divide.
There's still many millions of Americans who don't have access at all or have insufficient competition. We want to change that to make sure that every American has what I call digital opportunity.
The agency has handed out billions of dollars in funding and subsidies to improve rural broadband access, with another $16 billion slated to be auctioned in October.
The data that the U.S. has about broadband networks isn't really great, and the government doesn't have a good idea where broadband is and where it isn't. So if a rural carrier builds broadband across a certain county, it can get credit for serving that entire area when in fact it only serves parts of the area. And this ends up serving some homes while leaving others behind.
The FCC says it's fixing the maps, but Chairman Pai says the funding can't wait.
We see states that are still making policy based on what the cable and telephone companies, the big cable and telephone companies, tell them. But we electrified the country by recognizing that those business models did not work for all of America. And West Virginia is one of those places where those models really don't work.
The kids go to school online, and there are just so many different things you can experience online that they don't have the ability to do right now. and it's a shame. I am very lucky that I can rent this place, but I mean, that's not a common occurrence, and I don't think that you should be forced to do that when you have a perfectly good home. Why can't we get broadband?
It's an issue. It's definitely an issue. When I was in Chicago, I had one choice, which was fiber, and the connection was phenomenal. Here in Glen Ellen, which is a suburb of Chicago, I have one choice, and it also is good, but if it went down, I have no backup. In Nashville, for instance, there are 4 providers that provide 1 gigabyte download speed. It's just something that this country has to get together, and I just want you guys to be aware of it. If you're thinking about moving, you got to make sure that they've got a strong internet connection. It's just mandatory. So here's where we are on performance. Look at here. We've got 3 in green now. The NASDAQ up 34.5, even after today's horrible market day. The S&P still up 10.8. The Dow up 2. Russell still negative. So there's still an enormous gulf, 39% between the large mega caps and the high-tech sector in the NASDAQ and the Russell. Today obviously was tough, but Tuesday and Wednesday set record highs, best August in 36 years. Now I realize we have recency bias, and I'm going to deal with that in just a couple slides here, but let's for the moment forget about today and look back at August, the best August, which is traditionally the 3rd worst month of the year. What's the worst month of the year? September. All right? So all major indices participated on Tuesday and Wednesday. That's why you're still seeing the NASDAQ for the year way ahead of the S&P, but at least the Dow is now positive. We've been talking about this, and the Dow and S&P were negative for months, but now they're finally in positive territory. And yet this week, as you can see from the caption, the Dow and the S&P have outperformed the NASDAQ. And when that sector rotation started, the market internals got a little iffy, and so we had a huge sell-off today. But believe it or not, this is healthy. Now, what word did I just use? Recency bias. I need you guys to lean in. Here, I'm going to do it with you. Lean in and look at the very top corner of this chart. Everybody, come on. See it there? That itty-bitty little red blob? Okay, if you can't see it, look at this, and I just highlighted with yellow highlighter. Okay, that's what happened today. As awful as it felt, this is the move for the last 15 years. Okay, these are monthly bars. And what you saw was that tiny little red bar there at the top. So again, recency bias. It feels like the sky is falling, Chicken Little, but it's just normal market behavior. Normal market behavior. One flag that I saw over the last few days was the VIX, which is what they call the fear index, rising at the same time as the S&P. Generally, when the S&P is rising, you want the VIX to fall. And when the S&P is falling, whether you like it or not, the VIX is rising. But the VIX was rising even though the S&P was rising, which is saying fear is coming in even though prices were higher. And that ultimately is what caused today. Unemployment claims still headed down there. This forecast was for 950,000, which of course is a staggering number if you look back at February of 2020. But when the data actually came out, it was only, so to speak, only in quotes, 881. Okay, that's the lowest they have been since March 14th. Take that in, folks. We are headed in the right direction. Something that's been a constant theme of this program since I started on March 12th. Okay, the key takeaway is that these are the lowest they've been in the pandemic, and the economy continues to heal from this COVID-19 impact. All right, that's a positive. Zoom. All right, I've been talking about Zoom. Full disclosure, we own Zoom in 2 of our 4 programs. Blew away results on Monday. Absolutely blew them away. 38% move in the stock in one day. Just unbelievable performance, which says to me that the market believes we're going to be working from home for quite some time. And I think it's probably time to move over Tesla and Apple. And that may seem brazen until you see the next slide. Their revenue was up 355%, strong operating margin, earnings up 1,000+%. You just don't see these in a recession, in a pandemic. Okay? To give you a perspective, in May of last year, so 16 months ago, Zoom was worth about 18 billion, and IBM was worth about 122. Zoom just passed up IBM, one of the stalwarts of the entire American economy over the last 100 plus years. And Zoom, a newbie, just passed it up. Again, when you have the technology and you respond in a pandemic or in any crisis, you're rewarded by your shareholders. I've been mentioning ISM Manufacturing, new orders. I show this about every month. I highlighted in blue where we are now. It goes all the way back to 2003 till you saw a better performance than what we saw this past month. Very, very strong numbers. And these are comments. This is a little bit shorter term graph, so you can see the last 5 months have risen. Obviously, February, big drop from February to March. But these are comments from people in the plastic and rubber industry, primary metals industry, chemical products. Business is good, production can't keep up with demand. When we had Leo Kleinstein on here a few weeks ago, he was talking about the incredible demand that they have in manufacturing right here in the St. Charles, Western Chicagoland area. So the good news just keeps continuing, folks. Factory orders increased. Expected 5.7%. The July increase was 6.45. The key takeaway is the affirmation that business spending continues to pick up. Businesses will not spend money unless they believe they can make more widgets, and those widgets will be bought either by business consumers, government consumers, or actual Americans, the consumers who buy their products. Okay, they just won't ramp up. U.S. consumer spending is now back to early 2019 levels, not 2020. Not there yet, but 2019, considering it's literally just been weeks or a few months since this pandemic in which we still are in, and a recession in which we're still in, okay, that's a pretty good stat, really good stat. What are people buying? Durable goods, refrigerators, stoves, things for their house, okay, non-durable goods, and then last, services. Not spending as much on services, not going out, not going to the movies, just saving money there and investing in their homes. Why? Because their home is their new office. And they want to make sure that it's comfortable both to work from as well as live in. And I've shown you this chart about a month ago. I just think this is amazing. So home building rising, Facebook, Apple, Amazon. But what's the biggest percentage gainer on here? Lumber futures. Okay, so there's a futures contract on almost everything. One of the smallest contracts is on lumber. It's traded at the Chicago Mercantile Exchange, but it's a great indicator. Obviously, if building is happening, they need wood to do it. So if lumber futures are going higher, that means builders are going in there and buying and having to hedge against those costs. So that is a great sign that I think home building is just got nothing to do but nowhere to go but up, I should say. And when I was in Boston recently, I saw cranes all over the city. We still have them in Chicago. I mean, I hear about all the people that we're losing from Illinois, and I'm sure we are, but there's still construction going on. Now, this is an unusual story. I try to bring you things that are a little entertaining as well. Amazon drivers trying to get the next call for what they call last mile delivery. They're hanging phones in trees, and then they use the signal that comes into the phone to relay to their main phone. So imagine you've got a phone that's paired with another phone, and if they get the signal, they get a request to do a pickup just milliseconds before the next driver, then that means they get the job. I mean, that's how fierce the competition is in the stay-home economy when so much now is being delivered to us and we're not going to stores. Hang your phone in a tree to get that signal just a few milliseconds earlier so you can get the delivery. You would never have seen this before COVID-19. I think it's pretty innovative myself. Now, trying to be fair, we do have some news here if it's not great, and that's basically the debt. The debt in the middle, actually near the end of World War II and where we are right now are about the same. So for the first time in my lifetime, the debt exceeds the GDP of America. Now, this did happen, as you can see, over at the end of World War II, and it quickly was worked down. And I believe once this economy gets back in full swing, and I'm hopeful that we have a continuity of economic growth in this country that continues right on into 2021, you're going to see this debt to GDP ratio dropped just like it does here on the chart back at the end of World War II. What I've been saying since we've been doing this program is that some sectors, some industries pause and others take over. The more groups that we see in bullish configurations, the more strength the bull market gains. I've said many, many times, I believe that we are in a secular bull market, not a cyclical. A secular bull market, which means multiple business cycles that could last more than 10 more years. I really believe that. We make up for some short-term pain in our portfolios, which we had today, but look back at where you were on August 1st. You're still ahead. It's just recency bias when you see these days when they're just bludgeoning, okay? The long-term strength of the market is going to help our portfolios over time, no matter what we own. I really believe that. I still think we have a secular bull market that's going to run on all cylinders, even as we rotate sectors, and that we're in the early stages of this. You know, what happened the last time? Here it is in yellow, the Dow Jones clone. There was no S&P, there was no NASDAQ in 1918. The Dow Jones climbed both years, 1918 and 1919, which was also during World War I, okay? They climbed, the Dow climbed during this time. Too many people are confusing a healthcare crisis with a financial crisis. This is not a financial crisis. You guys have to believe me on this. That's why I keep giving you this data, okay? This is a cartoon from almost 100 years ago. People are saying, well, what about the rest of us? We want to catch up. Wall Street's out ahead. Wall Street is always going to be out ahead. It's always going to be the leading economic indicator. Okay, and the rest of society will catch up over time. Some sectors will not. Some industry groups will not. And you have to adapt. That's the way that a capitalist society works. I'm not saying I like it or don't like it. That's just the reality. A fundamental change, as in most of us listening to this broadcast tonight, will not see anything such a huge trajectory change as what we have right now. We won't see this again in our lifetimes. And many people in their 30s or 40s will not see it either. There'll be something that'll come along in 40 or 50 years, but this is big. This is really big, and people will have to adapt. I always finish this section talking about how earnings have been for the S&P 500 in the current quarter. Notice that we have 496 companies of the S&P 500 that have reported and only 4 that have not. 82% in green up there, 82% are beating their earnings estimates. That is a number of it's 9% higher than past quarters. It normally comes in about 73%, 1 or 2% variance. This is much, much higher, which means so much of the dire predictions just are not playing out. 82 is a great number. Reminding you again, those of you that are clients, every one of our clients has a CG account. We're up 42.5%. Yes, that is before today, which was down about 3.5 to 4%, because we don't have the closing data when I actually produce this. And then also our DG account, which is diversified with silver and some commodities and emerging markets and actually some German markets too, because the euro has been so strong. It's at an 18-year high versus the dollar. But it's still possible out there, guys. It's still possible to make money and good money even in the middle of a pandemic and even in the middle of a recession. So the 2020 election, both the conventions are done now, and now the gloves come off. Investors, believe it or not, JP Morgan says need to plan on Trump winning. Now, I didn't say that. JP Morgan, this was just yesterday. The market is working on a presumptive Trump win. The CDC, which is the entity that I mentioned very early in the program tonight, that is stating that we're going to have that vaccine and ready to administer it at the very end of October, very early part of November. Better coronavirus trends, which I'm pointing out to you, and the Federal Reserve continuing. Maybe, I read an article today that are we going to permanently have zero interest rates in this country? I mean, maybe. At least for the foreseeable future, nothing's changing until at least 2022. Certainly nothing next year. And I showed you this last time, and I'm going to show you a couple different states every week as we go forward. This is how states that are what we call not the deep blue or the deep red states. You will not see a Wyoming on here or a New York on here, but the states that vacillate between blue and red, Maine gave Trump one electoral vote last year, and Michigan, of course, won. You can see what happened in 2016, but Michigan is swinging back, according to the pundits, and Maine is as well. So it'll be interesting to see if some of these Midwestern states, the really important ones of Wisconsin, Pennsylvania, and Michigan, swing back to the blue column. I am not going to offer an opinion on that just yet, but we'll see as the time moves forward. What, of course, we want to avoid is a situation like Bush and Gore in 2000, I should say, 20 years ago, where the outcome was not determined until just before Christmas. And, of course, markets hate uncertainty. It would be better if there were a blowout either way on November 3rd so that we don't have to worry about all these mail-in ballot issues. Because if it's close, we're going to be counting votes or recounting votes for weeks, and it could even spill into next year. So you hear with our candidates here, about this time of year, that it really depends on the swing states. But the reality is that sometimes swing states are not the ones that you think they are.
Up until now, most of the conversation in the race between President Trump and Joe Biden has been about national trends. Who's ahead in the national polls, for example. But as the fall draws nearer, the two campaigns think about this less and less as a national race and more as a contest for a set of specific states. How can each campaign put together the states that are required to get to that magic 270 electoral votes needed to win in the Electoral College, which is, after all, how this race will be decided? For the Trump campaign, the formula for victory in 2020 involves trying to replicate as closely as possible the 2016 electoral map. Win the same set of states now that got then candidate Trump to the White House in the first place. And that in turn involves winning again Florida, Pennsylvania, Michigan, and Wisconsin. If he wins those four again, he's probably reelected. The problem for the Trump campaign is it's now behind in the polls in all four of those states. That doesn't mean he can't make up the ground, but the Trump campaign needs an insurance policy. Other states he didn't win in 2016 that he has a chance to take over now. So what's on that list? Well, it's not a long list, but the Trump campaign is looking at four states in particular: Minnesota, New Hampshire, Nevada, and Maine. That's the Trump list of takeover targets. What about the Biden campaign? Well, for the Biden campaign, the 2020 map also starts with that 2016 map and trying to win back those big four swing states: Florida, Pennsylvania, Michigan, and Wisconsin. And right now, as I said, things look pretty good for the Biden campaign in all of them. But here's the catch for the Democrats. That's what they thought in 2016 as well. They thought they would win all, or at least most, of those states, and they were wrong. So the Biden campaign also needs an insurance policy. Some states that the Democrats didn't win in 2016 that they have a shot at taking back in 2020. That list for the Democrats starts with the big and important state of Arizona. Beyond Arizona, Democrats think they have a chance of pulling back into their category North Carolina and Iowa as well. And when Democrats are feeling really ambitious, they think about Georgia and Texas as takeover possibilities, but frankly, those still seem like long shots. So there you have it, four big swing states and a total of 13 states overall where the two campaigns will fight out the election of 2020.
And literally on a week-to-week basis, we're going to see those numbers change. It should be fascinating, guys. And of course, it does affect our investments because Mr. Biden and Mr. Trump have very different ideas on things like energy and transportation, infrastructure, and many other points. So let's ask this question then. What is the likely outcome of this year's election on your portfolio? A, the election will have little impact. B, the election will have a big impact depending on which candidate wins. C, the election will not have a lasting impact after the first few months. And D, not really sure what to think about it. This is close to last week's question, but I wanted to give some of you guys that haven't been on here every week a chance to answer. So answer A, B, C, or D. I'm going to check the thread here, see if I've missed any questions. We operate on about a 20-second delay, but sometimes, depending on the server for YouTube, I've seen it be as long as a minute. And sometimes that's why, the answers come in late. So, okay, Nellie says will not have a lasting impact. So I'm actually able to put the comments on the screen. You guys should be able to see this when people answer here. So anybody else? What's the likely outcome? Rex. All right, there's Rex's answer. B, will have a big impact. Keith, same thing. Okay. K, looking to me. Okay, well, I'll do my best, Kay. I'll do my best. And big impact depending on who wins. I think you're right, Greg. Doc, only first few months, okay. Charles got a B. And B for Larry and Connie. All right, guys. Well, we will see what happens as we get closer. We are now 60 days away. It's hard to believe. 2 months from yesterday. 2 months from yesterday, and that's when it is. A little tidbit for you here. On this day in 1776, a committee led by Thomas Jefferson, I think one of the greatest Americans ever, recommended to the Continental Congress. Now, keep in mind, this is September. All right, so July 4th was the Declaration of Independence. They didn't have a currency. All right, I bet you didn't know that. Okay, but recommended that they create a basic currency called the dollar. It derives its name from a Spanish and Austrian coin called the thaler, named after a silver mining town in Bohemia. How's that for an oddball thing? But just realize now, when we had the Declaration of Independence signed, we didn't even have a currency. We didn't have a currency. We were still using the British pound. So freedom, guys, is not the natural state in which most of us have lived as humans. In our lifetimes, those of us on this broadcast have taken that for granted, I think, and I don't mean that in any disparaging way. But that's one of the reasons why I have the interest in New Hampshire that I do, because their Live Free or Die and their Free State Project is all about getting back to the roots of liberty and what it really means to be free. Much of society from thousands of years ago has not lived for free, or free, I should say. They've been under a despot. They've been under egregious ruling, and this country, despite its challenges, is absolutely set apart from every other country in the world, and I think every other country in history, because it does pursue life, liberty, and the pursuit of happiness. If you guys haven't checked out the site yet, give us a look there. You can fill out this risk profile. I had a couple do it this past week. It's free, takes about 5 minutes. Just gives you an idea if maybe emotionally you had a change in your market temperament. It'd be good for you. You can actually start a financial plan. You can have me look at it or just do it totally on your own. Happy to make that available to you. And just reminding you again to subscribe to our podcast here, because we're doing a couple a week. And we just want you to be able to tell your friends about it and tell them they should sign up too. We're on Facebook. Don't forget to follow me on Twitter, of course, with the tweets. Here's all our contact information. And I always close with from 2 Timothy 1:7, for we have not been given a spirit of fear, but a spirit of power, love, and a sound mind. It's my deeply held belief, even after this market crash today. It wasn't a crash, but it probably felt like it. Okay, because we've had nothing really since August of going up straight, but it is my deeply held belief, guys, that we will not only survive this pandemic, but we will emerge a stronger nation, and I believe a stronger stock market, and I believe it gives each of us the opportunity to become a stronger American, to deepen our faith, to be kinder to our fellow man. Guys, that's our show for Thursday, September 3rd. I'm your host, Charles Brown, Portfolio Manager with CB3 Financial. Thank you all so much for watching every week. I always appreciate it so much. Next week, a very special guest, another market portfolio manager who's actually one of my advisors. Definitely want to be here for that. He'll be taking questions. It'll be a longer show, actually probably about the same length, but less other topics, because we're going to get into the nitty-gritty of how we manage portfolios during this pandemic, and now if we're going to reach some market consternation here. Okay, guys? Thank you for being here. From COVID to clarity, this is CB3 Live.